Looks like we have an error on Facebook. There we go. Thanks for tuning into this broadcast of the Resilient Advisor Podcast. My name is Jay Coulter. This is part of the Advisor Growth Series, where my partner in this project, as always, is Jay Hummel, co-founder of the Wealth Advisor Growth Network. Jay, thanks for coming back on.
Happy New Year, man. It's great to see you.
Happy New Year. Now we've got fancy gadgets, live broadcasts, tickers streaming across the bottom. We're going to a whole new level. All right, let's start this year off with a conversation about insurance planning. And just so listeners know, this was Jay's idea because he has found advisors deliver some great client outcomes and improve their business by pivoting and focusing on insurance. So Jay, walk us through your experience as an advisor with insurance and then how you work with advisors to implement it in their practice.
Yeah, my opinion's really changed on insurance, as you know. When I was an advisor, we didn't do it. We did planning, but we farmed it down the street. And as we think about how firms are looking to grow, one aha as we started being out over the last year talking to end consumers that obviously are working with advisors and speaking with advisors is how do we grow? And I think everyone always immediately pivots to, well, I need new clients to grow. And as we crisscross the country, it's actually not necessarily the case. So many firms have the ability to widen the services that they provide to their customers and their current clients and do that in a way that drives more revenue for the firm, but also actually do something that's in the best interest of the client. And so that's why we have really, really been focused on how advisors and RIAs and independent firms focus more on insurance planning.
So you had told me that when you were an advisor, you didn't like insurance and you didn't get it. What exactly changed? Walk us through it.
Well, I didn't understand it. You know, it's a business that uses acronyms, much like wealth. It's hard to figure out who's getting paid what. Where are the hidden transaction fees? And it just always concerned me that if we couldn't understand it better, that we couldn't do right by our clients. But over the last year, what I've realized is as firms have moved financial planning to the center of their value proposition, which is what you and I firmly believe most firms should do, there's a huge gap when you do a financial plan and you can't help a client deal with the risks that they have in their balance sheet or in the way that they live their life. And so it was the aha for me that insurance really has to be a part of the planning process. And otherwise, there's a major gap in how advisors are serving families and how they help them manage risk. And so the light bulb went off for me is I believe planning at the center of the value proposition is really key. And if firms can't get good either through partnership or on their own in insurance planning, that's a gaping hole in their service menu.
So let's go through a thought exercise. I'm running a team with $400 million. It's an ensemble practice. Got great practitioners everywhere except insurance. How am I going to not only change probably the culture, but also the processes internally to start incorporating insurance? What would you recommend?
Well, I do think culturally that's a key point, Jay. And I think part of what's been the aha for me studying this extensively in the last year is everybody gets wrapped around the axle as it relates to how they get paid. And so they say, well, I'm a fee only firm, or I can't take commissions. I can't do insurance because I'm a fiduciary. And I think they're mixing fiduciary with being fee only, and they're not the same thing. And so I think people in RIA land immediately dismiss insurance because of the legacy way that it's been charged for and paid. And I just think I would love for our industry to have a conversation about the difference between being fee only and being a fiduciary. I believe you can take commissions and still act in the best interest of your client. So I think step one is I think many dismiss it because they haven't thought through that exercise. The second piece is I used to always believe that, or many firms that I look at say, well, we just send it down the street. And because I don't get paid, that's doing the right thing for the client. And the aha for me in the last year is, are you acting in the best interest for your client if you send them down the street, not knowing how they're being treated, not understanding the transaction that they're a part of? And so I think firms need to control it more if they're going to bring insurance planning to the center. And don't want to give too long of an answer here, Jay, but the third piece is there are great partners out there who can bring the expertise to an RIA without that RIA necessarily needing to be an expert in the space. And that's probably the other aha. As we've studied it over the last year, I wasn't aware of all the great best interest resources that are out there that can plug into the RIA space and bring that expertise and do it in a way that the RIA feels good about how they're serving their client.
You know, last month I had Brad Johnson from Advisors Excel come on the podcast. He has a very popular industry podcast, and we were focused on talking about fixed indexed annuities. I wanted to learn more, and he came on, and we actually did a fairly long episode, at least by Resilient Advisor standards, where we went deep on it. And get one of my takeaways is that if you eliminate commission-based products entirely from your value proposition, you're potentially eliminating some of the best tools out there to serve your clients. So he, like you, went deep on this idea of being a fiduciary versus fee-based and kind of convoluting those lines. And really, in order to get the better client outcomes, you need to consider adding these transaction-based insurance products into your practice.
Yeah, and I'm not even, I also think the other thing is annuities. Everyone hears the word annuity, and for many of the right reasons, they scoff. And so in the insurance category, people always put the annuity piece. What I'm really talking about, certainly as annuities and sort of index-based products, I think are interesting for some clients. But the other piece of it is, think of the long-term care issues that exist today. And when you sit down and do a plan, the ability to do long-term care. Think of just general life insurance in general. There's a lot of non-annuity type insurance transactions that clients need to have. And I don't know why an RIA wouldn't plug in and be willing to try to do that as part of the planning process.
Yeah. So let's talk about vetting those potential partners, because like you've said, there's lots of great organizations out there that you can partner with to get it done. You don't have to become the insurance expert. How can an advisory firm go out and through a best practice, vet the best service providers out there?
Well, there's a number of great providers, and listeners are happy to ping me. I'm more than happy to make introductions. As I said, this has probably been 30% of my time over the last year is crisscrossing the country and finding, who does this and who does it well. I do think the open architecture aspect, if I want to partner with a firm to do this, I personally would not want to partner with a proprietary shop. I know some people disagree with that, but I think there are a number of open architecture options out there that give you access to dozens, if not over 100 carriers, so that you can make sure that you're not in a proprietary situation, or you go to an exchange that only has 3 to 5 providers. If I was still running an RIA, I would want to do it in the most open architecture way I could to make sure that I got the best product with the best carrier for the best price with the client.
Yeah. Another benefit to adding insurance, actually, I got this idea from your business partner, John Phoenix, is that the business owner market is fantastic when they have their liquidity event. The challenge is they don't have liquidity events very often. And in a way to be able to serve them, leveraging the insurance marketplace is a great way to build those relationships before their liquidity events. Jay, do you have any best practices around that construct?
Well, I think we've talked about it before. I mean, I think there's some great tools out there today that allow you to go after a business owner and talk about business valuation. Right? Obviously, what the business is worth for a business owner has a significant decision or impact on whether or not they're under or overinsured. And so I think plugging in some of the technologies that are out there to have business valuation, I really would add insurance to a practice for two. Outside just the normal, we don't have a lot of time today. Outside the normal just planning process, you nailed one of them, which is going after the business owner. And I think it just gives you a way to get in the door, talk about business valuation, talk about risk. The other piece, which I'd like to banter for a second with you, Jay, is how do I reach the second generation? How do I reach the kids of my clients? Everyone's talking about, well, I need to go subscription based, and I need to go planning, and I need to charge a planning fee, and I'm gonna go try to do all this work. The aha for me in the last year is, what do most, if not all, of your clients' kids need? They're getting married, they're buying a house, they need insurance. And so I think bringing insurance into a practice to be able to plan, to be able to partner or build the expertise in-house is a much easier way to reach the second generation. Tend to get really exotic on a lot of these other subscription-based models.
Excellent. Jay, you've been so gracious with your time doing this advisor growth series. I really do appreciate it. Listeners, if you are looking for some of the best-in-class partners to partner with your advisory business, please reach out to Jay Hummel or John Phoenix over at the Wealth Advisor Growth Network. Visit wagn.biz, that's B-I-Z, and start a conversation with them. Jay, thanks for coming on.
Hey, thanks for having me.